Today is Monday, July 27, 2022. Let us take a look at today's crypto headlines. China's BSN chair calls Bitcoin Ponzi, stablecoins, fine if regulated. Google users think BTC is dead. 5 things to know in Bitcoin this week. Dogecoin price could rally 20% in July with this bullish reversal pattern. Goldman Sachs downgrades Coinbase stock to sell. Please like, subscribe and turn on the notification button to keep supporting our channel. China's BSN chair calls Bitcoin Ponzi, stablecoins, fine if regulated. Stablecoins like USDT and USDC would be doing just fine if properly regulated, while Bitcoin is a Ponzi scheme, in any case, China's BSN chair said. Amid the Chinese government continuing to celebrate the massive decline of cryptocurrency markets this year, one key local blockchain expert has referred to crypto as a Ponzi scheme. Yifan He, CEO of Red Date Technology, a major tech firm involved in the development of China's major blockchain project called the Blockchain Service Network, BSN, has penned a new article devoted to various kinds of cryptocurrencies and their supposed Ponzi-like nature. Published in the local newspaper The People's Daily on Sunday, the piece refers to private cryptocurrencies as the biggest Ponzi scheme in human history. The author mentioned the Terra network's collapse, with the native token Terra, Luna, now known as Luna Classic, LUNC, crashing 99% and the algorithmic Terra USD Classic, USTC, stablecoin losing its 1-to-1 peg value to the United States dollar in May 2022. He also criticized the increasingly popular virtual currency concept known as X to earn, referring to move to earn or play to earn projects, calling the model a phishing strategy. The BSN chair also mentioned some well-known criticism of Bitcoin, BTC, by Microsoft founder Bill Gates and legendary investor Warren Buffett. He is not a fan of Bitcoin or any similar cryptocurrencies himself as well. Currently, all unregulated cryptocurrencies including Bitcoin are Ponzi schemes based on my understanding. Just different risk levels based on the market caps and number of users, he said in a statement on Monday. The BSN chair added that he had not had any cryptocurrency wallet or related assets ever. I don't touch them and won't touch them in the future even if they become regulated because I don't consider that they have any value whatsoever. According to he, governments like El Salvador, which opted to adopt BTC as legal tender, seriously need basic financing training. Otherwise, they put entire countries at risk unless their original intentions were to build state-owned crypto trading platforms and scam off on their citizens, the exec said. While criticizing Bitcoin and many other crypto projects, he still believes that some part of the crypto market could be doing just fine if it's properly regulated. Cash-backed stablecoins like Tether, USDT, and Circle's USD coin, USDC, should not be viewed as Ponzi-like schemes, the BSN chair said, stating, USDC or USDT are payment-related currencies, not speculative assets. Once they are fully regulated, they are fine. He previously talked in favor of stablecoins in 2020. The executive once planned to integrate stablecoin payments into BSN as of 2021. The plan was eventually scrapped due to China's hostility to crypto. The news comes amid the Chinese government capitalizing on the ongoing crypto market crash to justify its multiple bans on the industry. The latest coordinated ban was enacted in September 2021, with multiple Chinese authorities taking action to prohibit all kinds of crypto transactions in the country. Despite all efforts, China continued to be a dominant Bitcoin mining supplier worldwide. According to data from the Cambridge Bitcoin Electricity Consumption Index, China was the second largest BTC mining hash rate producer after the United States as of January 2022. Google users think BTC is dead. 5 things to know in Bitcoin this week. Traders brace for fireworks in July thanks to macro triggers while BTC price action is on track for a historic monthly close below the 200-week moving average. Bitcoin, BTC, starts a new week above $20,000 but heading for a new bearish record as a key support level remains out of reach. After a calm weekend punctuated by a brief spike to nearly $22,000, BTC, USD is back near the closing price of June 24 for CME futures markets. A round trip thus allows traders to pick up where they left off at the end of last week's final Wall Street trading session, but what could lie in store in the coming days? A familiar cocktail of macro threats and ongoing bearish tendencies make the current climate far from ideal for the average hodler. Despite seeing some relief last week, crypto markets continue to bear the brunt of cold feet, which have defined macro sentiment increasingly throughout 2022. With the June monthly close fast approaching, meanwhile, Bitcoin faces a few days of reckoning amid what could be its worst monthly performance since 2018. Traders expect July to provide BTC price catalysts. Apathetic is a good word to describe the general sense of resignation among Bitcoin traders this week. While the weekend spared the average hodler more unwelcome surprises, data from Cointelegraph Markets Pro and TradingView shows the fact remains that BTC USD is far from where anyone wants it to be, even in a bear market. With the key 200-week moving average, WMA, out of reach, there is a precious little bullish sentiment out there, as evidenced by the extreme fear of the crypto fear and greed index still firmly in control. BTC will capitulate in the next 6 months and hit cycle bottom, anywhere between $14 minus 21K, then chop around in $28 minus 40K in most of 2023 and be at $40K again by next halving. Venture founder, contributing analyst at on-chain analytics platform CryptoQuant, summarized in part of a Twitter update on June 27. Venture founder's thesis is indicative of a broader belief that the bottom is not yet in for Bitcoin, and that any relief moves are exactly that: distractions on the way to lower levels that suck capital out of market newbies and weak hands. Expectations are that the first week of July could provide the next major bout of volatility across crypto and risk assets. Not much happening overnight on Bitcoin, but I'm expecting quite a slow week due to the lack of catalysts currently. Popular trader Crypto Tony confirmed July will be more of an action-packed month for volatility due to the catalysts upcoming. For Arthur Hayes, former CEO of derivatives giant BitMEX, the first week of next month is a period where macro stars will align to punish hodlers once again. In a blog post earlier in June, he flagged the United States Federal Reserve's outsized rate hike and balance sheet reduction as providing the key backdrop to a risk asset nightmare. By June 30, second quarter end, the Fed will have enacted a 75 bits per second rate hike and begun shrinking its balance sheet. July 4 falls on a Monday and is a federal and banking holiday. This is the perfect setup for yet another mega crypto dump, Hayes warned. A wild ride to the downside, thus could be just days away. The popular consensus for a genuine price bottom focuses on the area between $14,000 and $16,000, but $11,000 has also made an appearance, this corresponding to an 84.5% drawdown versus Bitcoin's most recent all-time high. How normal is this bear? While some panic sell their BTC, analysts are striving to show that so far, there is nothing unusual about the scope of the Bitcoin bear market. Among them is on-chain analytics firm Glassnode, which in its recent research piece, A Bear of Historic Proportions, called for calm on sub-$20,000 BTC. Bear market lows have historically been established with BTC drawdowns of -75% to -84% from the ATH, and taking a duration of 260 days in 2019-20 to 410 days in 2015, it wrote, with the current drawdown reaching -73.3% below the November 2021 ATH, and taking a duration between 227 days and 435 days, this bear market is now firmly within historical norms and magnitude. What singles out the current climate is not Bitcoin itself, but investors' reactions to price changes. Despite losses remaining within historical norms, sales of BTC at a loss have eclipsed previous records. The recent price collapse through to the $20,000 region was punctuated with the largest daily USD-denominated realized loss in history, Glassnode noted. Investors collectively locked in a loss of -$4.234 B in a single day, which is a 22.5% increase from the previous record of $3.457 billion set in mid-2021. In BTC terms, the losses amount to the third largest in Bitcoin's history. BTC risks first monthly close below 200 WMA. With 3 days left before the June monthly close, things are either looking worrying or interesting for Bitcoin depending on one's perspective. With the bear market in full swing, BTC USD remains below a key trendline that has supported it during previous macro lows. The 200-week moving average, WMA, which has never decreased in value, currently sits at $22,430. In previous bear markets, Bitcoin has retained the 200 WMA as support while wicking below it to put in floor prices. This time, however, the level is flipping to resistance as bulls' attempts to follow historical norms repeatedly fail. As such, the end of the month could be interesting, says stock-to-flow price model creator Plan B, as it would mark the first monthly close under the 200 WMA ever. An accompanying chart uploaded on June 26 shows Bitcoin's relationship to the 200 WMA versus the distance from its block halving events, these delineating the 4-year cycles, which contain the bear market paradigms previously referred to. Meanwhile, Checkmate, lead on-chain analyst at Glassnode, noted further unusual bearish traits currently characterizing the BTC price. In addition to being under the 200 WMA, he notes, BTC USD is also below its realized price and deep in the buy zone of the Mayer multiple metric. The Mayer multiple shows how far the price is below its 200-day moving average and, thus, how likely a buy at a specific level would be to generate asymmetrical returns. Such events in the past have only occurred for 13 out of 4,360, representing 0.2% of all trading days, Checkmate wrote in part of a tweet. Bitcoin dominance dives from multi-month high. It was only recently that altcoins were suffering even more than Bitcoin due to upheaval from multiple major projects including Terra and Celsius. Now, however, the tables are turning. Bitcoin dominance has reversed after spiking this year, leading to suggestions that altcoins could be the place to be in the short term. Bitcoin dominance is moving down strongly. The advantage lies with altcoins right now, popular Twitter account BTC Fuel summarized. After reaching an 11-month high of 48.36% on June 11, Bitcoin's share of the overall crypto market cap has declined to 43.46% at the time of writing, a noticeable shift in under 3 weeks. For veteran trader Peter Brandt, Bitcoin's relative strength versus alts could have more significance than meets the eye for bulls. This chart could be the big tell, he argued about the market cap dominance data. A decisive close back above 50% would be huge positive. Others are, meanwhile, confident that despite the latest reversal, it is not altcoins' time to shine in any meaningful way going forward. According to venture founder, holding BTC is still an investor's best bet. Normal bear market narrative altcoins bleed more heavily Bitcoin, Trading Suite Decent Trader added in separate comments on the latest dominance action. However, for the last 2 weeks altcoins, generally, have outperformed. So either this time is different, or this won't last. Dominance remains in 40 to 48% range. Bitcoin goes mainstream again, for the wrong reasons. Bitcoin is more popular among mainstream internet users than at any time in over a year, but is it something worth celebrating? Data from Google Trends confirms that more people have been Googling Bitcoin this month than at any point since May 2021. Then, as now, however, BTC price action was targeting long-term lows, rather than highs, indicating that it is bearish events that trigger mainstream interest. Last November's all-time high, by comparison, looks like a blip on the radar when it comes to search interest. As such, activity for phrases such as "Bitcoin is dead" has spiked, this noted by social media users as a possible sign that the market is in a capitulation phase. Dogecoin price could rally 20% in July with this bullish reversal pattern. Doge's bullish pattern has reached its profit target 79 out of 100 times in its financial history. Dogecoin, Doge, looks ready to extend its rebound move despite the current crypto bear market. 79% chances Doge will extend its rebound move. Doge's price appears to have been painting a bump and run reversal, bottom since May 11th, a technical pattern that points to extended trend reversals in a bear market. It consists of 3 successful phases. Lead in, bump and run. The lead-in phase sees the price consolidating inside a narrow and sideways range, showing an interim bias conflict among investors. That follows the bump phase, wherein the price drops and recovers sharply, leading to a price breakout, defined by the run phase. Dogecoin, Doge, looks ready to extend its rebound move despite the current crypto bear market. Dogecoin appears to be in the bump phase while eyeing a breakout above the bar bottom's falling trendline resistance. Suppose Doge breaks above the said price ceiling. Then, as a rule of technical analysis, it would eye a run up toward the bar's origin level. That puts Doge's price en route to $0.0941, up over 20% from the price on June 27. Notably, the upside target also coincides with the token's 50-week exponential moving average. Bar bottom has met its profit target 79% of all time, according to a report by veteran investor Thomas Bulkowski. Interestingly, The pattern's breakout stage typically yields an average 55% rise, meaning Doge's potential to hit $0.123 remains on the cards. Doge price is bottoming out? Dogecoin's run up to $0.0941 might not have it escape its bearish trend owing to a flurry of technical and fundamental factors. From the technical perspective, Doge's price risks run into a bull trap as it trends upward. It has already rallied almost 60% in the last 9 days. Notably, the coin's downside bias emerges due to a rising wedge pattern on its lower timeframe charts. In detail, Doge has been in an uptrend inside a range defined by two ascending, contracting trendlines, thus making a rising wedge. As a rule, this technical setup leads to a bearish reversal, confirmed when the price breaks below the wedge's trendline. As it does, the price could fall by as much as the maximum distance between the wedge's upper and lower trendline. Doge's rising wedge's potential breakout points fall within the 7 cents to 8 cents range. So, the token could fall toward the 5 cents to 6 cents area if the wedge breakdown pans out as intended, down 15% to 25% from current price levels. Fundamentals, including the Federal Reserve's rate hikes and reduction of its $9 trillion balance sheet, support the technical downside outlook for the short to medium terms. Goldman Sachs downgrades Coinbase stock to sell. The United States cryptocurrency exchange has seen its stock price plunge in lockstep with Bitcoin, Ether and the broader digital asset market. Shares of Coinbase Global Inc. Coin have been downgraded by analysts at Goldman Sachs after plunging cryptocurrency prices affected the exchange's underlying business, underscoring the challenges posed by the bear market. The reason for the downgrade stems from the continued downdraft in crypto prices, Goldman analyst William Nance said in a note that was obtained by Bloomberg. The analyst said Coinbase will need to make substantial reductions in its cost base in order to stem the resulting cash burn as retail trading activity dries up. According to Bloomberg, Coinbase still has 20 buy recommendations, 6 holds and 5 sell ratings as of June 27. Stocks with a buy rating are on analysts' recommended list. Stocks with hold ratings are expected to perform roughly on par with the broader market, and sell recommendations are calls to liquidate an asset. Coinbase began trading on the Nasdaq Stock Exchange in April 2021 and quickly exceeded its pre-listing reference price, eventually reaching $381. At those price levels, Coin had a fully diluted market capitalization of nearly $100 billion. However, since November, Coin has been on a downward spiral, plunging 84% to less than $58 a share. The stock was down 8% on Monday, dragging its market cap below $15 billion. The sell-off in Coinbase stock has occurred in lockstep with plunging crypto prices. Since peaking at around $69,000 in November 2021, Bitcoin, BTC, is down almost 70%. In addition to its collapsing share price, Coinbase has been forced to lay off around a fifth of its staff and has even gone as far as rescinding job offers. CEO Brian Armstrong said the likelihood of recession could prolong the so-called crypto winter and lead to an extended period of adverse market conditions. Credit rating agency Moody's recently downgraded Coinbase's corporate family rating to Ba3 from Ba2. As Moody's noted, Coinbase's revenue model is tied to trading volumes, which have dried up in recent months due to the mass exodus of retail traders. Don't forget to like, subscribe and turn on the notification button so that you won't miss any